We're going to discuss certain trading strategies for individual investors, specifically during such an extreme market environment like today during the COVID-19 pandemic. This project will be presented by Brian Leone, Jennifer Lamb, and Nicholas Auriana. To kick things off, we will begin with short-term investing options and things to look for during the COVID-19 pandemic specifically. We will begin with the stock market segment for short-term investments. These tips we are about to give provide some guidance if you are unsure what to purchase during these uncertain times. Full disclaimer, we are not suggesting you purchase these stocks we are about to talk about. However, we are going to be giving some examples of stocks that we believe follow certain trends in this market environment that prove to be optimistic investment opportunities. To begin, you want to look for stocks that are able to utilize current market situations, such as the COVID-19 pandemic, and are able to thrive in an environment where they can still take on day-to-day business operations and safely operate during quarantines and market shutdowns. The first stock that stood out to us was Carvana with the ticker symbol CVNA. Carvana is such an interesting stock to follow during these times because quarantines are forcing people to stay at home, which eliminates their ability to purchase vehicles to go buy essential goods. Everyone needs a way of transportation, and for most of us, it's a car. Carvana is currently experiencing massive increases in sales volume due to the current circumstances. Carvana provides a trustworthy platform that provides extremely accurate information on the vehicle you are remotely looking to purchase and offers excellent return policies in case the customer is not satisfied with their purchase. This gives customers assurances they need for a car purchase all in one website. The safety and convenience is something that shows Carvana is very forward-looking and that is a stock that definitely should be put on your next watch list. The stock we found that utilizes these current market situations is Shopify, which is ticker symbol SHOP. Shopify is also experiencing increases in e-commerce sales related activities due to stay-at-home orders. This increase in sales traffic will help increase revenue for Shopify and will look to have extremely positive quarterly earnings for the foreseeable future. In addition, Shopify can certainly operate safely during a market shutdown economy. Next, you want to look for stocks that help our current situation that are used increasingly during these times. This isn't necessarily a good long-term tactic because as these markets change, demand may fall for some of these companies. The first stock that we say has experienced this increase in traffic is Zoom Video Communications, or ticker symbol ZM. Zoom is widely used now to host school and university classes, as well as ways for professionals in the workforce to communicate simultaneously and stay on the right page. Transitioning to a fairly aggressive approach, you may wish to look for stocks that are showing positive vaccine results. Due to increased optimism in these medical stocks, some of them prove to be excellent and very short-term investments yielding big returns. Gilead Sciences, ticker symbol GILD, has had some positive trial results thus far, giving the stock a boost in volume. Now we would like to discuss what may help guide you to future success during the COVID-19 stock market. First, always set your stop losses generally at 10% below what you purchased the stock. It's always smart to set your stop loss in short-term investing because short-term investments generally are more aggressive and it's a fantastic way to minimize your risk so that you don't take a loss you can't afford. Next, you want to trade within the trends you see. Most trends come and go very quickly, so this is only smart to do with a short-term investment mindset. It's sometimes a good idea to take advantage of your current optimism towards stocks, which may lead to some nice portfolio gains. Lastly, look for your confirmations. Specifically, look at the moving average indicators when trading. When stocks go up, they eventually come down, so if you're looking at a stock with big percentage gains, always look for sell-off and profit-taking to occur, and buy in smart so you don't get stuck holding a stock with a higher average buy price. By looking at the moving average indicator, you can see that a particular stock is uptrending or downtrending, and you're able to avoid buying at a high peak price. Once again, it's always smart to set your stop losses and avoid losses you can't afford. Transitioning from just stocks, other options you may want to consider during the COVID-19 pandemic would be certificate of deposits or CDs. This is a higher interest rate bank deposit you hold for typically 3 to 5 years. This is a very safe, low risk option that is smart for someone who doesn't quite know what to do with their money but wants to see it grow faster than the standard bank interest rates. Next, Treasury securities may be something that you can look into. These are bonds that yield 0.5 to 2.5% returns over a 5-year period. There is no risk involved, and it is a very safe, passive way to make money during uncertain market conditions. Next, bond funds may also be worth a look because they offer higher yield returns but at a higher risk. They are offered at shorter time frames as opposed to bond investments, averaging 3 years or less. Although your risk is increased here, it's still nowhere near as risky as some volatile stock investments. Next, we have municipal bonds. These are issued by local or state governments and have high yields and are exempt from interest tax. One of the only downsides to these is that if interest rates go up, the value of your bond goes down, so always look to get in when interest rates are looking to be steadying or downtrending. Lastly, peer-to-peer lending is a great short-term investment because it allows you to lend your money out to credit-worthy individuals and you can pocket the interest. Through a company called Lending Club, individuals are screened to ensure your money is going to someone responsible enough to pay on time. It's a great way to allow your money to work for you.
Long-term investment strategies during COVID-19. In light of COVID-19, many have been struggling mentally, emotionally, and physically. People have lost their jobs and even their lives. A lot of fear has been circling, and we have seen an 11-year bull market come to an end. Overall, we have seen a major drop in the market value of stocks across the board. People are selling in panic because business has slowed and the fear of a recession is looming. However, it's important to realize that these troubling times may also be an opportunity. Ben Carlson, the author of A Wealth of Common Sense, once stated that markets don't usually perform the best when they go from good to great. They actually show the best performance when things go from terrible to not quite so terrible. In a highly volatile market like the one we are currently experiencing, long-term investment strategies may be more conservative and less risky than short-term investment strategies. While short-term investments are made with the intention of selling or cashing out quickly, long-term investing is the practice of buying and holding investments. Long-term investors must be able to afford and understand that the capital they invested as well as the returns from these investments won't be seen for a longer period of time. Overall, long-term investments are seen as more conservative. Typically, trading stocks, especially small cap stocks, are normally considered very risky. However, when buying stocks with a long-term strategy, you aren't looking to make a quick buck or trade on trends. Your focus should be on stocks that have long-term growth potential, therefore reducing the risk as you are able to weather the temporary dips in stock price. Long-term trading can bring tremendous value to a portfolio over the long term. In 2015, Apple's stock price was around $115. Today, Apple stock is worth over $300, a 172% increase just over the past 5 years. Also, the retail giant Amazon began as a small cap stock. Initial investors in Amazon who have held the stock over time have now made a lot of money off of the company. There are various types of bonds that you can purchase, including corporate bonds, municipal bonds, and U.S. Treasury bonds. If you invest in bonds with maturity dates that are further in the future, then you will have a low-risk investment that will pay off down the line. The main risk with bonds is that a higher rate of inflation could reduce the value of the bond at maturity. Mutual funds and exchange traded funds are both created from the concept of pooled fund investing. This strategy is often passive and aims to benchmark indices. Pooled funds bundle securities together to offer investors the benefit of a diversified portfolio, but with the benefit of lower transaction costs. Both mutual funds and ETFs will typically have anywhere from 100 to 3,000 different individual securities within the fund. Mutual funds and ETFs tend to be good long-term investments because it offers diversification, but similar to an individual stock, an investor must be willing to stand still through temporary market downturns. Certificate of deposits are investments with a bank. You will give the bank money for a predetermined amount of time. At the end of that time frame, you will receive your initial investment as well as interest. The longer the term, the higher the interest rate. CDs are considered very safe investments, and therefore the returns are not as great as the riskier long-term investments. Real estate is a very typical long-term investment, especially if you are buying property in an up-and-coming area. The initial investment for real estate is typically larger than the alternative long-term investments. However, it can be an attractive investment since you are able to borrow the bank's money to invest. Real estate also gives one the opportunity to bring in monthly income by renting out the property. Investing in gold is a great investment choice, especially when the economy is on the verge of collapse. This is because gold is a commodity that is likely to retain its value.
Alright, now we're going to move on to the pros and cons of investing during COVID-19. So to begin with the pros, it can definitely help you have more money than you would have had after coming out of this pandemic. Of course, if you make good investments during this time, you will most certainly have more money than if you chose to hold on to your money. Many stocks are low right now due to the economy, leaving more room for a higher return on investment if sat on for long enough. It is known that with our economy being in a bad spot, many stocks have fallen significantly in price due to COVID-19. JetBlue, for example, was at $26 before the virus and is now sitting at roughly $9. Stocks like this can provide a great return on investment if they climb back up to their pre-virus prices. And lastly, this can be one of the best times to invest, especially if you're in a financial position to do so, since most households are saving much more and spending less during this pandemic. Now, I can't speak on everyone's behalf, but due to many only non-essential businesses being open, most households have reduced their purchases of leisure products due to stores being shut down, such as the mall, clothing stores. While, yes, people do still shop online, many people rely on local businesses and clothing stores of that nature to spend their money on a monthly basis. Now, with this saved money, you can invest in the market rather than holding on to it. Now, to start off, move over to the cons. If perhaps the COVID-19 situation worsens in the upcoming months, this can deteriorate the market even further, potentially ruining the worth of any of your investments. Now, it's a scary thought, but it truly is an uncertain time, so you must prepare for the worst. Given what has happened to our country, most people did not see any of this coming, so you must invest with caution, as none of us know the future. And lastly, if you are one of the millions who are currently unemployed, it would be wise to analyze your current financial status because you don't know when you'll be able to work again. Of course, if you're unemployed, proceed with caution because you truly don't know when you'll be back to work. Now, it is important to consider, is investing now the right choice for you? There are many factors to weigh in when asking this question, and there is most certainly not one right answer. The right choice is often different from person to person due to many external factors. Everyone's financial status and current employment varies vastly, and these are two key factors to consider when thinking about investing. Of course, I may make double of what the next person makes, or vice versa, so financial status and monthly income will differ greatly from each individual. Personally, if you're out of a job, do not even consider setting aside any of your money right now to invest, but rather take care of yourself and your loved ones, because food is more important than possibly gaining more money in the future. or perhaps losing it all if the market takes a turn for the worse. I feel that if you are still employed and your life has not changed by much due to this pandemic, financially, of course, as we all have had many changes daily, then you should go ahead and invest because the market can very well be at its lowest we've seen for a while and will most certainly rise once the economy is back up and running. If the economy rebounds completely, which I feel it will, then now is a great time to invest. Overall, you must think long term and how stable your inflow of cash is during this time of uncertainty, and how comfortable you would be able to live without the said amount of money you choose to invest. My opinion on investing may be different than yours, due to my personal reduced income, so make sure you take this into consideration. During this time, it is more important to stay safe and healthy, and these are much bigger concerns than investing. However, as stated earlier, if you have the funds to set aside, now can very well be an excellent time to invest. At the end of the day, your personal health and well-being are far more important than money. But of course, this presentation isn't about that. So, as mentioned earlier, invest if you are able to.